Hi, welcome. My guest today is Steven Ulster, CEO of Fundthrough. Welcome, Steven.
Thank you very much for having me.
First of all, can you tell me a little bit, quite briefly, about what Fundthrough does and what kind of gap you see in the market right now?
Sure. Fundthrough is a marketplace lender for secured small business loans in Canada. We reduce invoice payment terms to 24 hours for companies that sell to other businesses and have to wait 30, 60, 90 days to get paid.
So what's your ideal client then? What kind of size?
The ideal client would be a company that sells to high-quality business customers, likely has less than $5 million in revenue, oftentimes has less than $1 million of revenue, would have less than 10 employees, and has to wait to get paid but wants to grow.
Now, from what I understand, you are a fintech operation. There's quite a few out there right now. A lot of people want a piece of what the banks are offering. You mentioned lending, and that sort of inspires a lot of associations with banks. Are you grabbing a piece of the bank's business?
So our clients tend to be too small, too new, just don't fit the credit box of a bank, or just don't want to deal with the hassle of a bank. So although, yes, we're small right now, we will take a part of the lending portfolio of a bank. We've heard that loans under $500,000 just aren't profitable for banks, and that's where we fill a gap.
But should the banks be worried about either your company or companies like you? Are there a lot of disruptors out there?
Well, some like to say that we are disrupting financial services. We think there's an aspect of that, but really we like to say that we're collaborating with banks. Where banks can't service clients, we can come in and service them.
Now, there's some criticism about the fintech space and that it's really getting going because the economy is doing okay, especially in the United States. But what happens when the economy turns and people aren't so keen to lend money and people aren't making as much money? What happens to these startups?
So right now the focus has been on origination, and it's been on the dollars that they have in their portfolio. There's been little focus right now on losses or cost of acquisition of clients. We believe that that is a little bit of a bubble in the US. In a low yield environment, you've got lenders who can't get access to yield. We offer access to this new short-term uncorrelated asset class called invoices to from small businesses to high-quality customers. And on the borrower side, banks just don't lend. So in a downturn, yes, the unsecured models may have problems. The secured models may actually end up doing better because banks won't be lending at that point in a downturn.
Well, good luck. Thanks very much.
Well, thank you very much for having me.